Bring in Dan Pickering. He's founder and CIO, I should say, of Pickering Energy Partners. Dan, what's your response to all of this, what you just heard Brian describe, and this very different kind of bull market, if you want to call it, that we're in, especially given that we're basically in a bear market in oil in the last few weeks anyway?
Sure, Kelly. Energy is a weapon, not something that's fun to talk about. When we look at the U.S., we're in a bit better situation, right? We have a lot of gas. We're exporting gas. And so we're not going to be in the same situation as Europe. We are benefiting from higher prices, we, the industry. That's going to flow through to our consumers and our population as we move through our winter. But right now, it's bullish for U.S. natural gas prices, and it's bullish for U.S. energy stocks.
Our nat gas prices have still just about doubled, probably year to date or over the past year. So we've seen stocks of big producers move accordingly. But if we see further moves to restrict our exports, for instance, would that be a problem?
Well, what we've seen is restricting imports and bottlenecking a commodity, whether it's products or gas, would be a negative for price. We've seen that. The Freeport LNG facility had a problem, restricted their exports, and we saw price come down temporarily. So, yes, if we reduce our exports, that's a bad thing for price. But generally, we're going to be part of the energy solution, the energy security solution for Europe, and that's going to play out over the next 3 or 4 years. And so, that's generally bullish for price.
And should we just run through the list? I mean, is there any reason why people shouldn't feel comfortable betting on stocks like Antero, EQT, Chesapeake to participate in further gains and for the nat gas price to rise further from here as well?
Sure. When you look at that, these stocks are very inexpensive, 2 to 3 times cash flows and generating free cash yields in 23 of 20% plus. So they're inexpensive, and they've got this tailwind from a macro perspective. So it feels like they're a good place to be. Energy is not particularly popular with the market right now, but the underlying fundamentals are strong and the stocks are cheap. So it feels like a good place to continue to have exposure.
What would you do on the oil side of this? Especially, look, we know the president wants to push things in a clean energy way and will probably pursue means like a further windfall tax or something to that effect if they have to, if they feel like prices go back up and the consumer isn't responding well to that.
Yeah, oil names, I think, are still part of an energy portfolio for sure, because they're also inexpensive and we've got a tight oil market. I think there's more political risk around oil, and you've got an overhang of energy transition. Natural gas is going to be a longer term part of the answer, right? The EU just said natural gas is part of the green solution. So gas has probably more favorable, 15-year trends. But in the near term, both oil and gas stocks, I think, make a lot of sense to be involved in.
Shepard Smith here. Thanks for watching CNBC on YouTube.